Hey everybody, Trace Cohen, angel investor here, and I recently wrote a post called The Top 10 Questions Founders Must Be Ready to Answer When Fundraising, because it's a difficult environment, and Q4 2023 is going to be a huge pipeline for investors as founders go out to raise more capital. And so there's a little bit of nuance I wanted to go through in terms of each of the questions, and feel free to follow up if you want any more clarifications. But the first one is, what problem does your product or service solve? I read a lot of decks, dozens, hundreds of them, and sometimes I literally have no idea what founders do. So please just make it very clear what your problem is and what is your solution, because if I don't understand what you do within the first 30 seconds, I'm just going to skip it. And that kind of goes into number 2, which is, what's your unique value proposition? This is your solution, but why are you better? Why do you suck less? Who's your competition, and how are you a little bit different from them? Sometimes you just need to be a little bit better, 5%, 10%, 100%. You tell us why and why it matters. And then this kind of goes into the market opportunity in terms of, is this 10 million, 100 million, a billion, 10 billion? How big of an opportunity is this? If you get 100% market share, but that's only $100 million, still really impressive, but we need you to have billion-dollar opportunities. And that kind of folds into number 4. What's your business model? How do you make money? There's really only like 5 ways of making money, and that's either you can sell a product, you can do a SaaS subscription, and that's really how I want to know how you generate capital. Are you going to stack revenue? Is it advertising? Are you taking affiliate revenue? How are you going to make money, and how is it going to be consistent, and how is this going to get you to significant millions of dollars in sales? And at the pre-seed seed where I kind of play, half our investments are pre-product, pre-revenue. But if you have any current traction, any metrics, please show them off. Say why they're significant. Are they pilots? How long did it take to get a sales cycle? How much is this potentially worth in the future? And what metrics do you actually need to achieve in order to close this deal and get more? Probably the most important question you have to ask is, or answer is, who's on your team? We're investing at you. You're early, you basically have nothing, you're hopefully a little bit more than an idea. Who's your team? What's your unfair advantage? Why are you trying to solve this problem? Have you been dealing with this 5, 10, 15, 20 years? Are you very technical, and is that what is necessary to really alleviate a problem going from analog to digital? And so during that process as well is, what are the risks? Is it really just a money problem? Are you just going to throw money at it? Do you have to be more technologically savvy? Do you have an unfair advantage of connections, whether to customers, enterprise, defense contractors, or are you the de facto expert and you know what others don't? Now, with the capital, question number 9, what are you going to do with it? You're raising $1 million. What's that going to get you? It's definitely not going to get you the profitability, but maybe you can get to quote-unquote product market fit, showing that customers are interested and want to use your product, even if it's free. We'll figure out conversion rates and business models later. The goal of really a pre-seed seed investment is to find out if people actually are interested in your product, and if they are, if there's demand, you can then raise additional capital to meet that demand and then monetize it. And then your long-term vision for the company. Is this just one product and you're just going to sell it really well? Half the investments that we make actually pivot, not a full 180, like you're selling sneakers and now you're going to do enterprise SaaS. But if you are selling a product, you find a new customer, you find new branding, new wording, you kind of tweak that, you launch a bunch of features, but this one feature is actually where you want to focus. And that's perfectly fine. We bet on founders to figure it out. And what they need to figure out is, the bonus question is, what's your exit strategy? If you raise capital, you are no longer really in the business of scaling a profitable, growthable company. What your end goal and what your business is now in is in the business of exits. Yes, it will take 5, 7, 10 years, but if you're building this, you need to build it to sell, to look like a piece of cheese that one day an acquirer wants to purchase. Kind of like that buy versus build. Can they do this internally themselves? IPOs. Look, it's a IPO drought. A few are going public now. We'll see how it turns out, but that is a very long-term goal, and that can still be what your vision is. But you need to come across all of these questions, write them down, and have a solid answer. And the best thing is if you don't have an answer, or if an investor asks you a question that you're not familiar with, one, you should be. Two, do not make it up. Go back, find out the answer, and follow up. But basically just ensure that you have thought of almost everything. What you know, what you know, you don't know, and eventually what you don't know. This will help you increase your chances of getting funding from an angel, from a VC, from potentially a strategic as well. And so just want to make sure that if you're going out to raise venture capital, you understand the game that you're getting into, the expectations, and what it takes not only to run a business, but to raise capital as well in order to sustain it.